What is going on, everybody? In this video, I'm giving you a state of the market and stock picks for February 18th, 2022. So, state of the market, where do we stand? Well, right now, we are coming back down to that level I've been talking about. That 4,300, I think, is a strong possibility coming into tomorrow. We've had a digestion from the FOMC meeting notes, and we held overnight. So I think the market's still confused. There's still very low volume. One thing we have to remember is the stock market is closed on Monday for the holiday. So we're going to have a short week, which normally entails low volume in itself. So normally people won't be holding longs into the weekend. But what tomorrow does provide is provide us possible openings moving forward. We still have to be mindful that coming into March 15th, the next FOMC meeting, there's going to be, Bullard was on today and was talking more about specifically how big of rate cuts there are. They want to do 100. He keeps talking about 100 basis points, so more than what initially was expected. He's saying July, but just because he feels the economy is very strong, but he feels inflation is still going to wreak havoc throughout the year, as well as supply issues. So there's still a lot of things, but then he was hawkish at one aspect of it, but then he was also very dovish in another aspect in saying that they're not going to go full throttle, but kind of leaving that door open. Like if we need to do it quick. We don't want it to run away. Really, at this point, if it's going to run away, it'll happen before the Fed can actually act on it, for them to actually know if it is runaway inflation. So we're going to have to see what they're doing. Again, they still haven't stopped tapering. That is a big thing they need to stop. So maybe in March, maybe we get, they've been talking about a complete taper removal in March. So we'll see if that happens. I think there's a strong possibility that will happen. The market's not really concerned about that. It's more worried about what kind of rates and the speed at which the Fed tries to apply these rates is what's going to matter. If they come in, again, too hawkish and they try to start piling on too many rate raises at one time, that can scare the market. But it's that initial rate raise is what we're kind of looking at. The initial two, possibly. If we get one that is within essentially parameters, which Bullard was kind of talking about today, about it was going to be under essentially the lowest possible rate raise first in possibly March-ish time period. And then from that point, then they will increase it more going forward. So we'll have to see. I think the initial shock might get some volatility, but then they start getting really aggressive is what we're trying to watch, is how aggressive does the Fed get? And that is what is going to really determine how we do moving forward. So again, there's going to be a lot of volatility. Everything that I was thinking again for the beginning of this year has been moved up. And again, the Fed have become very hawkish about everything. So we have to see how we play out for the rest of into March. But I do believe we will have some sort of rally going into there. We still have all the Russia garbage that we're still dealing with. That's going to be ongoing until that's alleviated. I think it's just a game at this point, as I don't think anybody's going to actually strike. Even China came out today and was saying that that they think the U.S. and Ukraine and Russia, that they need to work it all out, and that they really were kind of standoffish on everything. So that was a good sign. If China, for some reason, had wanted to partner with Russia, we would be in trouble, and then the market would probably get scared at that point. Probably impact semiconductors along with tech. So all tech would probably come crumbling down if that happened. But thankfully today they did come out and they said that. So it's really just a game here of cat and mouse. We're trying to figure out what's going on with the rates, and until then, we're going to get a lot of chop. We're going to get a lot of up and down until we figure that out. So as far as picks, I think let me actually go over SPX real quick. So let me actually go over the SPX here real quick. Again, I've talked about this essentially all week, that I've thought we would come back down and retest this. It looks like that's exactly where we're going. As long as we hold this level, if we do break down, that's going to make a lower low. I mean, we really have to get down to that 420, 42.22 mark, essentially have a full body candle that's sitting that low. What caused for a lower low, then I would expect us to retest this, retest the trend line on the way down until we finally break out. We might actually continue this pattern until we reach the Fed, the FOMC meeting, which could be a strong possibility. This has been a very strong level, so I don't really want this, again, the 43.13 mark to break. If it does break, it could be a little concerning. What I'm kind of thinking might play out actually, though, is we might actually wind up in here pretty tight and then break out for, like I said, a little bit of a rally, probably possibly come retest this 45.75 mark again. And then hopefully by that time we know what the Fed is doing. If they start tapering a little bit, we might get a little bit of pullback and then start running. But again, depend on their aggressiveness. If they start getting really aggressive, this thing could sink down. Again, I don't see us crashing. I don't think this is going to cause a crash. I know there's a lot of people talking about that. I don't see that happening in the markets. This is not something that's blindsiding us. Again, we try to correct it enough to price it in. So the market's already tried to do that in itself. So again, if whatever reason the Fed just started going crazy on the rate raises, which they know they don't want to do that because it can hurt the market, they'll slowly do it. So we might get a lot of these pumps and sideways and dumps for most of the year. I think towards the back half of the year, though, I think we'll be strong. Again, the market's going to always continue to go up. It needs to go up just for everyone's 401ks. So the Fed tries to at least keep that in mind. Yes, it's a big game of cat and mouse, but nonetheless, they try to keep that in mind. So they're not trying to devastate this. And again, I don't see us cratering for no true reason. I know there's a lot of panic out there. I wouldn't be panicked. The rate raises are normal. You're just going to see a lot of this junk is what I like to call it. So that's what I got for SPY. Again, watching that, essentially that 4,300 tomorrow. See if we hit that tomorrow. If we do hit that, more than likely, if we get down to that, I'm looking to play bounces on that. So to go over Bitcoin real quick, Bitcoin's starting to sell off again. Again, the whole market just being a little uneasy again with Ukraine and everything. We still got a higher low here, so as long as we can remain essentially above this 3,500, 35K mark, I think we're good. I think we might actually retest this 38 or 30. We'll go about 37, roughly around that 37K mark. I think as long as we can stay above that, that's a little high, and we continue up, try to make a higher high there. But continue up and try to make a higher high there, and then I think Bitcoin will be perfectly all right. Again, I think Bitcoin will be the inflation gauge. I know one thing to keep in mind too was gold was really running parabolic here. So normally gold would always be the inflation gauge upon any kind of fear. But it's been kind of dormant, especially with Bitcoin. But it seems people are starting to gravitate again towards gold, going into worrying about inflation and everything. So we'll definitely have to keep gold on watch. Once we start getting worried about inflation, if we get any kind of data that's saying inflation isn't bad, gold might actually be a good short. So but that might be a long ways in between before that does happen. So what we need to see. So one thing I want to keep in mind when I'm talking about all this stuff is what you need to start doing, or a good piece of advice here would be, is to start looking at the industry leaders that you like, that you love, that you believe in for the next 5. Come in with a mindset you believe in for the next 5 to 10 years, and focus solely on those, on this dip, on this choppiness, all this junk that is going on. Because why I like to play beta stocks, why this channel is called Beta Memoir, is because of that fact, because they are industry leaders and they recover very fast. People will put their money into well-known companies first upon recovery before they start dishing them out towards the mid-cap and smaller cap companies. So going forward, Tesla is a big one I want to watch. Coming on this dip, and one real key aspect to watch here is that 831, if we do break that, I could see us coming all the way down to the 775 mark. If it starts hitting that low on Tesla, I'm definitely going to start buying quite a bit of Tesla at that point. But again, one of the big ones you want to keep on watch. So tomorrow we got this 860 mark tomorrow. And then after that, we have the 820 mark that we need to hold. So I'll probably buy the dip here and see what happens. Again, if it breaks that, then they have that psychological level, which is 800, which is essentially where this wick hit. Then again, like I said, the 850 or 750 mark is what I'm looking at there. Google is another big one. They get a stock split. This could be prime time to be buying Google if you want to buy Google and realize that you get a 20-to-1 stock split coming in July. So if we can dive back down, essentially that 2,500 mark would be fantastic. We have to see if we get there, though. We still have some very strong supports here. First one being at 2646. That's the daily 200 there. And then you have the 2600, essentially the psychological level. And then you have that 2500 as well. Sitting there, which is a good solid level there. So watching these key levels and looking to see, again, if you're holding for 5 to 10 years, it really doesn't matter. I think on this dip, this next dip that we're getting, you have to realize that too, that we need to hold these levels coming into the Fed. Now, again, this is all going to be gauged off of how crazy the Fed's going to get. So you just have to be mindful of that, be very vigilant. Play lightly. If you are trying to invest in some of these great companies, I would slowly start to do so. So when I'm talking about these key levels, I would slowly start to add on these key levels just in case, because the Fed may come out and kick the can down the road, and then this thing's going to go to all-time highs again. So you have to keep that in mind. So when people are in fear, that is the best time to buy, and especially have that mindset of 5 to 10 years out, which is great. And why, again, like I said, go with industry leaders, because you don't always get the opportunity to buy great companies like this at some of these ridiculous prices right now. UPST is another big one I really like. They were actually said that they are resembling much of a Google-like atmosphere in their growth, which is fantastic for UPST. Again, it's AI for auto loans. So really looking at this one, or not auto loans, but automatic loans, not auto car sales. So looking at this one for it to come back down, I want to start revisiting that 88 mark. Back under 100 would be fantastic. We just had killer earnings, so I don't know if we're going to get that chance. First, I'm looking at the 118 mark. Then the 196, just under that $100. Again, every round number is going to have that psychological level. So you'll typically get, especially on the 100s, the 150s, the 200s, you're going to get big bounces off of those, or big rejections off of those going into it, or coming into it. So just realize that. So that's another big one. Any of the chips I'm really looking at too. NVIDIA, really disappointed in that one, but I think still your AMD, LRCX are really good chips to be watching on this dip. I'm not sure what's going on exactly with Shop, but Shop would be a good one, I think, going forward. Shop, I would be more mindful, just kind of letting it base. I think Shop will get to a point where it starts basing, and when it starts consolidating for a long period, those are the times you want to get in, because typically, it's not going to sell much further past that. So Shop is one I do want to watch. I don't know if it's going to get there. But for keeping a short time frame, start looking at some value. One thing I really like is Airbnb. Is another huge one. They do fantastic. They recover very fast. It's a very well-known company. They just crushed earnings. If the market decides to sell and this gets chopped in half, again, that 134 mark is a great mark to pick up Airbnb. It recovers very good. It hasn't actually really truly came back and retested this 200 level at the 166. So that's something I do want to watch tomorrow. If we do get that low with Airbnb, I'm looking for a big bounce off of that, possibly continuation. Again, I think between now and March, we're going to get a lot of Fed speaking. We're going to get some other news. We have to be mindful too that there's always going to be other news. It's not just going to be clear skies. Right now, it's clear skies until March, but stuff can always come up. We still have Russia stuff going on. We have to really be mindful of that. But having that mindset of a longer term time frame, 5 years out, again, you're not going to get bigger discounts than you have now when things are down 50 to 60% on a lot of really good stocks. So Airbnb, again, another big one I want to watch. Those key levels there, even if we break out the Fibonacci levels here. So again, I've already zoned all these. The 155 mark here is a good key level to watch too. But ultimately, I'm kind of looking, it's hard for it to get below the 146 mark. But if you do, it does get below that 146 mark, it's almost like an instant buy because of the fact that it does recover very well. And when I'm looking at stocks at these levels, I always look for the ones that the fundamentals are extremely solid. And ones like UPST, Airbnb, Tesla, and Google, they just absolutely crush it. Their numbers, and they still have massive amount of growth still left in them. So those are the ones I go for. And there's some great like Palantir. They got extremely wrecked today, but those ones they don't have. They're not in it essentially for growth. They are trying to provide a service that is helpful for security purposes, right? And that is all well and great, but you have to understand that people are looking at this at profits, margins, revenue, and stuff like that. So you got to come at it with a different aspect if you're looking for a growth stock and looking, because ones like your shop and Facebook is absolutely destroyed. That's why they are changing their name to Meta. That's why they are shifting everything, because essentially that platform, Facebook, is essentially sitting dead in the water. So, but that's pretty much what I got. If you guys have any questions at all for me, leave them down in the comments below. If you got anything in particular you want me to go over, if there's a particular tutorial you want me to go over, just go ahead and do that. How I do these zones, these supply and demand zones, essentially what I look at when I'm watching these key levels. So, but if you've made it this far, I appreciate you, and go ahead and smack the like button. Until next time, I'll see you guys later.